Hi folks, this is Lee Gettess with Market Sense for the week of 9/21/10. The charts we use are provided to us by the Trade Navigator software from Genesis Financial Technologies. Looking at the bond market, the bonds got a little juice from the Fed statement Tuesday. They had opened the week down here just below 130, but they've come up pretty strongly for the week and then accelerated when the Fed statement sounded like they were maybe going to be buying treasuries again. I don't know if that's true or not, but at least it sounded that way, so that got people excited, and it went up through the initial resistance there at the blue line and the green line. The next level of resistance is up here at the red line, which kind of coincides with this previous swing high. I think this was 133.12 and the line's 133.13, so that's obviously the next area that'll be of concern to them. They could go test the highs, though. I mean, when they get excited and you think the Fed is on your side buying, there's not much reason to sell. So it'll be interesting to see how they react. But I expect them to move a little higher here. The first resistance is about 133.12 to 13. And if they can break that, then they might not only test these highs, they could go right through them. So that'll be interesting to see what they do there. In stocks, the stocks also liked what the Fed had to say, but not quite so much, and we have sort of an unusual situation here. We've had these old double tops right across here ready for quite a while now, and so there's bound to be stops up above them, and they have broken above them nice and cleanly. But what this creates is what's known as an inverted head and shoulders. You've got the head down here, a shoulder here, and a shoulder here, and you've broken above the neckline. It's like a guy standing on his head, if you would. And a lot of people think that's a good sign, and it means they're going through this old high. And they could be right. I mean, I'm not telling you that's not going to work. It could be. But it's also quite possible that they've taken out this double top, that they run through some stops up here, and then they just run out of gas and turn lower. Whether this goes to new highs or whether they stall here, I think probably we're looking at this being the end of any move up, and they'll go down for a while. The one exception to that is if they've turned down right now, if from this 1150 area, if they turn down and head down for the rest of the month, that actually could be setting up a rally for the rest of the year, which is an interesting conundrum. But right now, I think 1150 is the resistance to be concerned with. If they can get above that, then these old highs are definitely in range. But I think we'll see some sort of blow off that will top it off and turn down from there, and I just don't know if we've already seen it or not. We'll have to monitor and see what happens. Oftentimes the reaction to a Fed deal is known more the morning after than it is the afternoon after they release the statement. So what Wednesday brings us will also give us a big clue about the next couple of days. So that's what we've got for you today. I sure hope you can find something profitable to get yourself into. Thanks for checking in with us. We'll try it again next week.